Good morning, traders. I trust you're well. Just got 8:30 a.m. on Tuesday, the 26th of May. And as always, a quick market recap. First, this morning, I want to take a look at the equity market. In fact, the US futures are keeping near gains of 2% ahead of Euro trading session. And risk is definitely on, as we can see the equity market and S&P 500 breaking well above the $3,000 mark here. If price is to stay above $3,000, then yes, intraday trading opportunities will become valid. Personally, for me, it is quite strong resistance. I would like to see how the daily bar closes today. We see a break below. I'd expect to see some sort of pullback. And yes, I much prefer trading on a pullback than jumping on a train that essentially is already left. Now, we have seen price drive well above 3,000 previously, as you can see back in December last year. But we do want to see some sort of pullback to allow us a cheaper price to get in at and a higher probability trade. So just look at the equity market. Bear that in mind. All the time that we're driving, you can see this driving sentiment's on. Risk is definitely on in the market. But as I say, if you are looking at a textbook entry, definitely look for some sort of pullback to allow you a better price to get in. Any smaller time frame pullbacks, and we see a break and a continuation above the $3,000 mark, may be interested in trading the momentum there. On the back of that, obviously, we've seen a bearish dollar, bearish yen this morning. To be honest, this is pretty much all because of vaccine developments, and that's pretty much fueling, or talk of vaccine developments, which is fueling the drive in the equity market. So on the back of that, we have seen dollar break lower, yen break lower as well. Now that could all change because personally, I'm still set to see a bullish dollar. So the way it stands as we're looking at this market now, I would just take this as a short-term bearish move. But of course, price action will tell us everything. If we're looking at dollar index on a daily chart, we're still trading within our ranges. You know, we've got 99 to 100 as our hard level of support. We've got 140, 99, 60 as our softer level of support. Now, ideally, I did want price to stay above 90.60 and drive the market higher, back into perhaps 101. Definitely possibility there, although over the next couple of days, we typically do start to see a turn in bearish move for the dollar heading into June. But I do think where we've delayed this bullish push, we was going to see one last drive higher before the market then pulls back lower. So just looking at the smaller time frame, as you can see, huge continuation bar, break below 99.60. You've got quite a messy reversal pattern in here. Now trading below soft support. If we do see a continuation, I would like price to drop back to 99, as we saw our double bottom formation before breaking higher in this region previously. So you're looking at about 46 pips worth of shorting the dollar index market. I'm keeping my eye on this now. I am looking at buying euro dollar. Euro dollar is typically bullish, or can be bullish in and around this period. So I am interested to, as I say, to buy euro. But again, it will be momentum based. I will be managing tight. We'll be keeping stop loss tight just until we allow ourselves a bit of equity to build up and we can become risk free. Then we can manage how we trade euro, what we decide to do next. Because as it stands, and as we know, a lot of these major currencies are fixed across daily ranges, so we do need to see clear breakouts before we take advantage of any sort of longer term trading opportunities. So again, dollar index breaking lower. Yes, I would like to see price down at 99. Whether it gets there or not, I'm not sure. But as it stands, we have opened up bearish, and we are seeing a bearish move lower. On the back of that euro dollar, as you know, we've got 107.70, price rejected support last week. We're now back looking to target 110. 110 has been a significant level we have been trading, both buying and selling from over the recent times. So I would like to see price back testing 110. A break higher would confirm moves back up to 113. So I think our safe buying zone comes once we break 110, guys, break above the 200 moving average. But intraday trading opportunity is definitely valid, as this does look like the first cycle to take us back higher over 110. So again, you've got a ring low formation here. Indecision bar, strong engulfing bar this morning on a daily chart. If that closes like that, it would confirm additional buying. Looking at the hourly chart, yes, we can see a break of cyclicity in here. Price is moving higher. Our textbook entry would be another cycle to allow us a cheaper price to buy it once we have a high to target. And we'll look at buying in here, taking the market back up to 110. So bear that in mind, guys. We have looked at placing a buy stop order at 0940, just in case there is that driving sentiment that does take us up higher. So just bear that in mind. But as it stands, yes, I am happy to be buying euro dollar, especially this morning. Pound's an interesting one, guys. I still want to be short pound. I still class this as a daily phase 2 currently. As you can see, we've got the breaker pattern in here. Price created a new low. We are still typically in phase 2. Now, what we do have to be aware of is this 24 level. Now, if we do see a daily pullback and a bearish rejection off 1.24, this would confirm a high probability daily entry to enter the market short with plenty of reward to choose. So bear that in mind. Daily pullback can pull back to 124. Then look for bearish opportunity back from that. Now, any 4-hour cycles, as we can see from a 4-hourly time frame, we do need to see some sort of break lower. So I would like to see price, again, this 4-hour candle close below 1.2245, which has acted as recent support. If we see a bearish close, and perhaps this could even finish as a high test bar, then fantastic. That may allow us to place a sell stop below and take the market lower. All the time the dollar's weak, this isn't helping pound push higher. But again, any talks of negative interest rates, and of course we've still got Brexit in the back burner, there can be negative impacted news with the pound at any second. So just expect to see a break lower. But personally, I'm not looking to do much with pound until I do see some sort of confirmation that the price is moving lower. Now, again, we do have 120 as an eventual target, guys. I do think price is more than achievable to get there. So we're looking at over 200 pips in play once we do see that breakout. If the daily pullback comes up to 124, you've got a 400-point move lower. So let's look at risk to reward. If you can risk 100 pips to gain 400, fantastic from a daily opportunity. Once that market then starts to run, we do see a daily phase 1 back lower. All of this is your opportunity to continue selling. Any smaller time frame cyclicity, 1 hour, 4 hour, even drop to a 15-minute. Follow the momentum and the drive of the move of the higher time frame move lower. Aussie. So as we kind of discussed last week, I didn't get into too much detail. We kept this for the advanced guys, but the correlation with S&P 500 has been strong. As we can see over the last couple of days, you look at Wednesday, Thursday, it did start to drop off as we met the 66 mark in and around the 200 moving average. There's various reasons why we should be looking at shorts in here. Technically, this did start to tee up shorts in and around this area, but as I said, the drive and the correlation with the equity market has seen price move higher. So not looking to be a seller of Aussie just yet. And again, all the time we have a weak dollar in play, Aussie bulls will take charge. So just bear that in mind. And of course, as we look to the S&P 500, it's still looking strong. If we do see a continued drive in the S&P 500, I would expect this to slowly continue building up. I mean, the correlation did look like it had dropped off, but again, another instant surge with talk of all this vaccine cures and whatnot's out there is driving the Aussie slightly higher. Now, we do have to take this into consideration, and we do have to monitor price action quite tightly. So I want you to look into the smaller time frames here, even drop down to the 1 hour time frame. The first sign that you get of a lower high, lower low formation will indicate the bears are back in control. So smaller time frame cyclicity to lead the way. We may even find an early aggressive entry if we do get a lower high formation in and around or below the moving averages. That may give us an aggressive entry to actually get into this market. Kiwi, very, very similar. Not the most attractive chart, but is back meeting resistance of 61.50. Again, I would like to be short this market, although if we're looking at Kiwi itself, I mean, Kiwi is typically bullish in and around this period. If dollar is weak, we may see a drive higher. So not top of my list until this market starts to become a little bit clearer, personally. But again, if we're looking at short-term buying opportunities, you've got the daily 200, 130 pips away. So if we see a break of recent support, pullback, retest, you may get an opportunity to buy later on today or even tomorrow. So Kiwi, yes, there is potential for short-term buys, but all the time we're consolidating in and around this area. It shows the bulls were not in control as they were essentially when typically buying during the period back that we saw in December and the second period that we saw back in October, and then we saw a longer-term position back in December 2017. So what I'm trying to show you is that when this market drives, it really does drives. What we're seeing at the minute isn't quite attractive. So dollar CAD. Again, dollar CAD, we've been monitoring this 1.3920 level acting as key support recently. Now, again, as you can see, lower highs being formed. There has been bearish sentiment across this market. So I would like to see a breakout either side before I take charge. Now, again, dollar opened up weak, but I don't see that move sticking, essentially. If it does, of course, we have to look for a break and retest to move lower, but just allow price to consolidate in and around this period now until we see a stronger break higher. So personally, I'll be looking again smaller time frames to lead the way because it's going to take a couple of days for the daily charts to actually stay clear. So any sort of bullish cyclicity back and above our bearish trend line, we can look at entering. But again, guys, all the time the daily charts are consolidating the way they are, there's definitely no need to dive in. Sometimes the best trade is essentially not to trade. So just wait and be patient for clear breakouts higher, and then we can take charge and pretty much fill our boots up when the momentum's there. All the time there's no clear direction, we stay away. We look at other markets, other commodities to take advantage of. The FX market at the minute, I'll repeat again, a lot of the majors are range based. So just stay clear until you see a clear drive, a clear moving momentum. Then we can take advantage. Even if we have to drop to smaller time frames, look for cyclicity to allow us better opportunities or more textbook setups, then we have to do that. But as it stands today, especially with CAD, and obviously we'll move on to Swissy now. Swissy is not exciting at all. Between 96 and 98, it's been ranging. Personally, for me, if I see a break above 98, will confirm strong buying. A break below would confirm strong selling. We did look at a short-term opportunity last week, which was successful when we saw a breakout of our triangle pattern. But again, look, we're back testing the sort of middle of this range anyway. So not exciting and not top of my list personally. Dollar yen, I still stick with my dollar yen. If we break above 108, I'll be looking to buy this market. All the time we're below, it's, as you can see, it's slowly progressing, but it hasn't sort of moved significantly. Dollar's weak at the minute, yen's weak at the minute. It's still showing that it's slowly moving higher, so not top of my list trading today. If we see a break above 108, which I think we will towards the back end of this week, then I'll look to continue trading it. Dollar Singapore is another one. It looks very, very similar to dollar CAD as it stands. Not top of the list until we have confirmation of how the dollar's performing. So essentially, where we're sitting at the dollar, we want dollar back above 99.60 to look at buying into 100.40. All the time we're below, yes, we're happy to intraday short, but it has to be managed tight. Euro dollar, happy to be a buyer of euro, and I may look at buying euro Aussie once Aussie comes off, or euro CAD once dollar CAD goes up. But from the way it stands at the minute, euro dollar is looking a potential buying opportunity back into 110. So you've got about 60 odd points in play there, but let's just find confirmation within this move. There still isn't a lot of volume being pumped into the market at present. Remember, yesterday was a bank holiday too. Cable still looking to be a short, want to sell pound across the board. We're going to bear in mind 24 as our daily reversal point to look for a high probability textbook entry short back down to 120. All the time that we're in this position of where the 4 hours pretty choppy, is failing to break pattern, I'll probably stay away. Aussie being driven on S&P 500 equity market correlation sentiment. Again, wouldn't mind being short this market, but if it breaks the 200 and the S&P continues driving, then we have to take advantage. We have to adapt to this move, look at shorter time frame opportunities to buy. Kiwi's very, very similar. You've got 130 odd points into the 200 daily moving average. A break of resistance at 61.50 would lead, and obviously the S&P 500, the equity market still driving higher, may lead us into intraday opportunities, managing very, very tight in here. But as I said, when it's consolidating like this, yes, it shows some sort of bullish sentiment. The fact price is staying around there, but the market isn't being driven. The buyers are not in control. If the buyers are in control, we would have seen a real surge higher. Dollar CAD, I'd like to be a buyer. Want to be a buyer if price stays above 39.20. Plenty of upside potential to take the market back higher. It's just consolidating. Strength and weakness isn't playing a key part here. It's very range based, so nothing exciting just yet. Dollar Swiss is pretty clear. I'm happy to be a buyer above 98. Dollar yen, happy to be a buyer above 108. Dollar Singapore, until we see some sort of direction from the dollar itself, there's not much we can do here. Just have a look at gold. I know quite a lot of you are looking at gold. For me, this is in a daily phase 2. I would like the daily phase 2 to drop slightly lower. If we can see a pullback and a retest into this sort of 1700 region, that'd be fantastic. But potentially I will see how price action forms on the daily chart. If we consolidate around the 20 and then we see some sort of bullish engulfing buy, I may be interested in actually buying gold again. But just keep that in mind. All the time you're in this daily phase 2, I wouldn't dive into it on any of the smaller time frames. It's far too easy to be caught out. So perhaps, as you can see, a break above bullish cycle, then potentially we may look at buying gold itself. Oil, I know quite a lot of you have been doing well from oil. Personally, for me, I do see this pulling back, retesting. Even $20 is fine. Back testing $20 and then looking to move higher. I'd rather be a buyer in here than a buyer up here without having some sort of pullback. So again, I'm not looking to dive in oil, but intraday buying opportunities, short-term opportunities are fine. Managed stop loss tight, happy to do that. But again, just look for some sort of higher time frame pullback to give you a cheaper price to buy out. After such a strong run, it's definitely overdue. Equity market as well, as you can see, FTSE 100 slowly gaining. S&P 500, as we know, is trading above 3,800. Dow testing 25,000 essentially. I see price meeting the daily 200 moving average then to see some sort of daily pullback here. Bear that in mind. And again, until we see these breakouts of this range that we're seeing across the majors, I wouldn't dive into too many opportunities. But guys, the most important thing to do at present is to find direction. So as I said, if I'm looking to buy the euro and sell the pound, then essentially euro GBP should be top of my list to buy. As it stands at the current, you can see we're in a daily phase 2. The daily pulls back to the 20, bullish price actions formed, and we've seen agreement with euro, agreement with pound. That would give us an opportunity long. So find direction within the majors, understand the sentiment, then move on to your cross currencies to find your intraday trading opportunities. Okay, guys, get in touch if you do have any questions, but have a lovely day and good luck trading this week.